I don't know if I was looking at this number anyway. I mean, and I'm an economist, right? So here's what I mean. I think, with aside from Omicron or Delta, which, they've clearly showed up in the mix of jobs and in the mix of spending from an economic perspective. Instead, what I would say is we have so much labor market data in hand that really shows that we're in incredibly tight labor markets. I mean, we're 4.2% on the unemployment rate, right? We're within a stone's throw of being at max employment, despite Delta, right? In spite of Omicron. So I think that we have ADP from earlier this week in hand. It printed 800,000 jobs. I don't know that there's anything that's going to happen today with the payroll report that's really going to surprise us. And again, you're spot on. All this data is collected in mid-month. But I would submit to you that even after we get past, this number and we roll into the January report, I don't know that Omicron is going to be a game changer. I mean, Powell has been right on this one thing in particular, which is to say each wave of COVID has really had less and less economic impact. So I don't know that I would make a big storyline around Omicron in this payroll report. I think that we're at tight labor markets. I think that the labor market is going to remain tight over the balance of the year.
Well, listen, we are in the Northeast, and there's going to be people that probably get furloughed from their jobs in New York City and Boston and D.C. because of what's happening now. Yep. It's easy. We look at that. We say, oh, these people are going to lose their jobs because of the COVID. What we forget is that about 90% of the country has kind of moved on. And they're living like half America, never had a pandemic. I traveled all over the country in the last 18 months, not being rude about it. People just moved on. They just went to restaurants and went to proms and whatever. So we get a little caught up here. If we get an $800,000 or 800,000 print or something today, Tom, something like this, does it affect the Fed's timing and thinking?
No, I don't think it's about labor at this point any longer. So here's just some and I know we're probably running short here. So let me just be really quick on this. I think what you have to keep in mind is if you think about the year 21, we printed on average about 550,000 jobs per month. We're not going to do that in 22. I mean, we're probably going to print half of that. Job growth just on sort of a sequential change basis is going to slow. I think for the Fed, the shift has already occurred. I don't think it's really about the labor market nearly as it is as much about inflation. We're going to get inflation print next week. And I think that is the thing that probably ushers in a faster tightening cycle. I mean, I think the market is right to price in very high probability of a March hike. And at this point, it's entirely about inflation more so than the labor backdrop.